What's up, everybody? It's Nathan from Dividend Growth Machine, author of the book Dividend Growth Machine. And today we're going to be having a little fun. We're going to be talking about the 32 top dividend prospects. And this is in honor of the NFL draft that's today. If you guys are fans of football, you probably already knew that. If you are not, if you're overseas, outside of the U.S., probably don't care. But for those of you in the U.S., we're going to have a little fun with this. Today's the draft, and I personally am a Colts fan, so I'm cheering for them to pick up somebody good in the draft this year. But anyways, I thought it would be kind of fun. We're all we haven't seen sports in a couple months, so everybody's looking forward to having some kind of pseudo sports action today. And we also get to do the draft virtually, so everyone gets to watch Jerry Jones. Watch him try to use Zoom to do a digital draft, which could be entertaining. But anyways, we're going to look at the top 32 dividend prospects for you to consider adding to your dividend growth portfolio. Quick disclaimer, I have not researched these in depth. I am not giving you investment advice. This is not a recommendation to buy or sell any of these companies. They're just ideas. Do your own due diligence. Don't make decisions by any means based on this YouTube video or any YouTube video. Do your own research and make sure these companies fit what you're looking for. So before we do that, I want to start with just how I came up with this list. So this list is a quantitatively derived list. So this is not actually my personal opinion on what the best 32 stocks are. This is a list that was derived from what I believe to be a pretty good basket of companies. So we start with the S&P 500. So we have 500 stocks to begin with. We then narrow that list a little further by looking only at the companies in the Nasdaq US Dividend Achievers. So that is essentially the same index that VIG tracks, the VIG ETF, which is about 182 companies. And all of these companies have raised their dividend for at least 10 or more years. So 10 or more years of dividend growth. Then the third criteria, I required that any company in this list has to have at least 5 years of positive free cash flow on average. So basically that means they're able to not only generate positive operating cash flow, but they're able to do all their capital expenditures, invest in growth projects, maintain their existing assets, and they still have money left over. That's the key to being able to pay and grow dividends as well as reinvesting in your business. So free cash flow is absolutely essential. Then these are actually ranked based upon what I would call the Buffett Acquisition Yield, which is essentially just if you bought the entire company, paid off its debt, that's how much you had to pay for it. How much would you get from what the company is returning to shareholders? So it's dividend plus stock buybacks. That is a better overall picture of what investors are actually getting. Gives you more depth than just dividend yield alone. A lot of times a high dividend yield will also be a company that's issuing equity or has borrowing a lot of money to pay the dividend. So by using this metric, basically what we're doing is we're eliminating those types of kind of lower quality dividend payers. So I'm just going to call this shareholder yield. Is basically similar to what this is. Buffett Acquisition Yield is kind of what I like to call it. So that's how the list is sorted. What you will notice about this list is it's not a high dividend yield list. if you're out there looking for a bunch of high dividend yield stocks, this is not the list for you. These are high quality, ultra, in a lot of cases, fast growing dividend companies. They're the kind of companies that I think you and I would want to own for the next 10, 20, 30 years. And that's the type of company that we're looking for to build long-term wealth. You should not be focused on dividend yield alone. A lot of those companies, especially now, are likely going to end up cutting. Anything with a 10% plus dividend yield is probably in some pretty big trouble here. So it's not a high yielding list, but it is a high quality list and a focused dividend growth list. So without further ado, let's go to the 32nd pick in the draft, which belongs to the Kansas City Chiefs. Kansas City Chiefs select Ecolab, ticker symbol ECL. Nice pick here by the Kansas City Chiefs. The only concern here for Ecolab is a slightly higher than average dividend yield, but overall, very solid company. Do a lot of sanitation, industrial type products. Has been one of the best dividend companies, I should say, for a very long time. Nice pick by the Chiefs. 31st pick, San Francisco 49ers select Broadridge Financial Solutions, ticker symbol BR. Have a decent dividend yield here at 2%. PE ratio is a little high at 30, but kind of a smaller company that you may not have heard of. They were actually spun off from ADP in 2007. So they do a lot of technology to banks and that sort of thing, kind of behind the scenes for financial institutions. Nice little company there. 30th overall pick, the Green Bay Packers select W.R. Berkley. This is a insurance holding company. Again, it's a smaller market cap, so it's going to end up being a mid-cap type stock. The dividend yield is pretty low, but they do buy back a decent amount of shares, and it's a really quality little company. So if you're looking for a quality financial, this is an interesting name to take a look at. 29th pick, the Tennessee Titans select Raytheon Technologies. This is the first stock on our list that has a dividend yield of 3% or more. Nice PE ratio, good yield. The only concern here for this one is 1 year total return is negative 55%. So do your due diligence there to see what's going on with that one. The 28th pick, Baltimore Ravens select Sherwin-Williams. Solid dividend growth name. Obviously, we're all staying at home with the coronavirus economy, so we're going to end up painting our houses, and that's what you like about this one, at least in the near term. So nice pick there by the Baltimore Ravens. 27th pick, Seattle Seahawks select Colgate-Palmolive. Classic dividend payer, nice yield, very high quality, good market cap size, not the biggest company in the world, but also not small. Really solid pick if you're looking for just kind of a core holding in your dividend portfolio. Obviously, they are in toothpaste, home care products, shower gels, deodorants, things like that. Classic consumer staple. The 26th pick, the Miami Dolphins select Johnson & Johnson. Don't need to say much about this one. Just one of the best companies really in the history of the United States. Really can't get much better than this when it comes to building the foundation for your dividend portfolio. 25th pick, Vikings select AmerisourceBergen, ABC. This is a wholesale pharmaceutical company, basically engaged in, being the middleman between pharmaceutical companies and pharmacies. So nice company here, nice pick by the Vikings. 24th overall pick, Saints select Jack Henry and Associates. This is another one that's works with banks and credit unions, kind of in the back office type, processing systems, things like that. So really nice little company here. Not a lot of people know about it. Major concern again here is this PE ratio is a little high, so make sure you do your valuation work on this one. The 23rd pick, the New England Patriots. Boo. Sorry to you Patriots fans. Patriots select I'm sorry, I wasn't even showing the screen. That's kind of embarrassing. Anyways, we're 23rd pick. The New England Patriots select Microsoft. It's a nice pick there by the Patriots. Just a classic dividend growth. Company has obviously done tremendously well here recently. The 22nd pick in the draft, the Buffalo Bills select the Procter & Gamble Company. This is one of the oldest dividend payers around. It's founded in like 1837, so it's just a classic dividend stock, consumer staple. Again, another solid core holding in your dividend portfolio. The 21st pick, the Philadelphia Eagles select Waste Management. This is a pretty boring company. They're trash delivery, trash pickup, recycling, that sort of thing. Nothing exciting as far as the company goes, but the stock itself is pretty stable. Again, a really nice holding for your portfolio. 20th pick, the Jacksonville Jaguars select JB Hunt Services. That's basically a trucking company. Done really well here as of late. We're still going to be buying and delivering lots of goods and services, so it's a nice stock that's insulated from a lot of the impact of the coronavirus. The 19th pick, the now Las Vegas Raiders select Church & Dwight. Again, core dividend holding, a lot of consumer staples on this list, and Church & Dwight, a lot of solid brands from them. Number 18th, Dolphins select S&P Global. This is the index provider for the S&P 500. They also provide credit ratings and then a lot of data services to institutional investment firms. Really, really great stock. It's been one of my favorites for a long time. 17th, America's team, Dallas Cowboys, taking ADP at a 2.6% dividend yield is about as high as I've seen on this company. It's a really quality company. Long history of dividend growth. Very payroll processor. They deal with almost every S&P 500 company, with the exception of maybe a couple, but they're just a dominant payroll processing company, HR services, that kind of thing. 16th pick, the Atlanta Falcons take Republic Services, another trash delivery company or trash pickup, recycling. Again, not a huge dividend yield, but it's a very, very quality company, very stable, holds up well. And, we have trash in pretty much any economic environment right now, probably more than ever. We're all getting boxes delivered to our house. So this is a nice company here, nice pick. The Denver Broncos go with Nike. Nike's classic, doesn't need much explanation. Just again, another stable, kind of staple dividend growth, high growth company, low yield, but hold this thing for 10 years and that your yield on cost is gonna explode. Brown-Forman goes to the Tampa Bay Buccaneers, the 14th pick. They are the largest U.S. producer of alcohol, spirits. 13th pick, my Indianapolis Colts select Lockheed Martin. Nice pick there by the Colts. This is, just a great company, long history of dividend growth, backed by government contracts, obviously. So just a lot of stability here in this name with a 2.5% yield, slightly below average PE ratio. Again, market cap, not a mega cap, but it's big enough that it really has a lot of scale. Just a dominant company for the aerospace industry. Number 12, again, we have the Las Vegas Raiders again. They're going with Walmart here. Nice pick. The only complaint here with Walmart is the latest run-up. You've had a lot of people flocking to this company for obvious reasons. They're one of the biggest benefactors from the coronavirus economy, and they're going to do well, but they've been priced for that. So again, do your valuation work. Pick number 11, the New York Jets select Comcast. Obviously dominant in the cable industry, but they also have NBC. NBC Universal, CNBC, all that. So again, 2.6% yield, nice PE ratio, larger company, but not up there with Apple and Microsoft. So it's just a great stock. Good, again, another good core holding. We're all going to be using cable and internet more in this type of an environment, so they should do well. Cintas with the 10th pick. The Cleveland Browns select them. Again, this is deals a lot with the employment. So they've been hit pretty hard with the unemployment numbers going up, but just a great company. They do, uniform rental, and you go to a bathroom, and they're the ones that refill the soap dispensers, and just kind of do the back office things that a lot of businesses, that have uniforms. They don't want to be the ones to do laundry, so they outsource this to Cintas. So it's again a dominant company in a kind of smaller niche area. It's a good spot to look at. The 9th pick, Jacksonville Jaguars take Assurant, and we've got another insurance provider here. This one you may not have heard of much. It's a smaller company, the mid-cap size of $6.2 billion. Nice dividend yield, and again, they're in the insurance area. So this is a nice pick at number 9 by the Jaguars. Number 8, the Arizona Cardinals are going with Expeditors International. Again, smaller, mid-cap type company. They're a logistics provider, so they're holding up decently well in this type of economy. Number 7, this is my favorite pick. Carolina Panthers go with Visa. Very small dividend yield, but this is just an absolute dividend growth animal. They process 65,000 transactions. They're capable of processing 65,000 transactions per second. It's the largest payment processor in the world. So just absolute great pick there by the Panthers. Number 6, Chargers, with a questionable pick here, in my opinion. The Globe Life, which used to be Torchmark, is in the health insurance, life insurance. The issue here with Globe Life that I'm not a fan of is this low interest rates have a major effect on them. So just be careful with that. They're issuing life insurance policies, and as interest rates go down, they suffer as a result of that. The 5th pick, again, the Dolphins with their 3rd pick in the draft go with Northrop Grumman. We just saw Lockheed a couple picks ago. Northrop Grumman comes in at number 5. There again, aerospace and defense, just a fantastic company. Not a real high yield, but you're getting a lot of quality here, a lot of consistency from them, and they're not going anywhere anytime soon. Number 4, the New York Giants go with Kroger. This is obviously benefiting massively from the coronavirus, with more people grocery shopping. And the interesting thing here is, will people staying at home result in more people cooking from home? That would obviously be a more of a long-term benefit for them. But just be careful here that they've been priced for perfection, you might say. I mean, there's a lot of optimism for them for obvious reasons. The question is, 10 years from now, is this a permanent boon to their business, or is this something that's just kind of a short-term phenomenon? Sorry for these titles here, but the Detroit Lions at number 3 go with W.W. Grainger, GWW. Again, a nice smaller dividend company here. They're in the industrial distribution business. So that area has been, hit a little bit hard here with manufacturing struggling. It could be a nice value pick here for the Lions. Number 2 overall pick, McKesson, MCK. This is, again, just like we saw earlier, it's another logistics provider for the pharmaceutical industry. Lower yield. Not a huge fan of this pick here at number 2 for the Redskins, but good company. Just not quite sure that the long-term value is here. And the number 1 pick, Cincinnati Bengals go with McDonald's. This can't make any complaints here at number 1. McDonald's with 43 consecutive years of dividend growth. I think they would be at the top almost every dividend list that you could find. Probably somewhere in the top 10 is going to be McDonald's. So again, building a portfolio, it's hard to beat, starting with a name like McDonald's. So great pick there by the Cincinnati Bengals. So just real quick, let's go back down the line. Got McDonald's at number 1, McKesson number 2, W.W. Granger at number 3, number 4, Kroger, 5, Northrop Grumman, 6, Globe Life, 7, Visa, 8, Expeditors International, 9, Assurant, 10, Cintas, 11, Comcast, 12, Walmart, 13, Lockheed Martin, 14, Brown-Forman, 15, Nike, 16, Republic Services, 17, ADP, 18, S&P Global, 19, Church & Dwight, 20, J.B. Hunt, 21, Waste Management, 22, Procter & Gamble, 23, Microsoft, 24, Jack Henry & Associates, number 25, AmerisourceBergen, 26, Johnson & Johnson, 27, Colgate-Palmolive, 28, Sherwin-Williams, 29, Raytheon Technologies, 30, W.R. Berkley, 31, Broadridge Financial, and last pick, Ecolab, number 32. So what I'm going to do here, that's the draft. So what I'm going to do is I'm going to make a portfolio on M1 Finance. I'm going to equal weight all of these companies, and next year, whenever we have the draft again, we'll have 2021 NFL draft, I will take a look at how this portfolio has done over that year, and we'll compare it to how the S&P 500's done, or the VIG index or ETF. We'll see how it's done, and also then we'll do another draft, and I'll re-rank these companies by the same criteria, and we'll just see how that kind of quantitatively derived portfolio holds up. So if you want to get notifications whenever that comes out, hit the subscribe button down below. It'll be on this side. This side of your screen is the little red subscribe button. Hit that, hit the like button. That helps me out a lot, helps YouTube identify this as being interesting for other viewers. So check that out, hit the subscribe button. I've got a link in the description to the M1 Finance portfolio if you want to follow along with that. And then I'll try to report on how that's doing maybe once a month. We'll just take a look at it maybe and see how it's doing. So hopefully that was enjoyable for you guys to watch. Thanks for spending a couple minutes here with me, and I hope you guys enjoyed the list, and I hope you guys have a great rest of your week. And if you're going to watch the draft tonight, hope you enjoy that. And if not, well, good luck with your investment portfolio, and leave me a comment if you like this or have any other videos, any other questions you've got. I'd love to help you guys out in any way that I can. So thanks a lot for joining, and